So why the need for change, and why do we need to accelerate the digitization of our industry? Well, essentially, it's this problem here. So this data comes from Landmark. It comes from Landmark's whole of market data. And as you can see, it shows sale transaction milestones. So if we look at the blue line, what that essentially shows us is the average amount of days it takes for a residential sale from instructing an estate agent to actually completing that sale. And if we go all the way back to 2007, the average time taken for that transaction to complete was 85 days. If we look at where we were at the end of last year, in 2023, the time taken for a transaction to complete has risen to 159 days. That's an 87% increase. So let's think about that for a moment. 87%. So the situation hasn't got any better. In actual fact, it's got much, much worse. Now, there are different reasons for that. And to be fair, the issues aren't really in this room. They're elsewhere in that transaction process. So I'm not beating anybody up here, by the way. But that is the situation that we face today. And the fact of the matter is that costs money. It's an issue. It costs firms money in terms of time, resource, etc. And ultimately, it costs the UK economy. Because what that situation leads to much more fall-throughs and much more failed transactions. The issue essentially comes down to three things that we've derived from that data. First and foremost, we know transactions have become much more complex. Legislation, verification checks, AMLs, onboarding, know your customer stuff, more regulation and requirements in terms of lending and valuation. For example, the need to have cladding certificates now has become really important, and various other things. Impact of climate transitional risk and climate change on valuation, and a number of other things. But, also in that process, more inquiries, more conveyancing, and eventually more delays. What that leads to is essentially a more wasteful process, and not having the tools, technologies to not just teeter around the edges, but improve some of the core parts of that process is part of the issue. And then eventually, the whole thing becomes time consuming, and as I mentioned, more failed transactions and more fall throughs. But it doesn't have to be like that. And, as I say, the issue isn't really in this room. We will talk about improving sort of connectivity between lenders and surveyors and valuers, but the issue isn't really in this room. It's in other parts of the transaction, but as a member, if you like, of the overall industry, we all have a duty of care to each other and to try and improve that for our end customers. But as I say, it doesn't have to be that way. So we've had the digital tools, we've had the data, we've had the right people for some time. But I guess, and this is what Mike will talk about in a second, what we haven't really had is the connection. So how do you connect all of those things up? How do you connect all of those parts of that transaction process up so that we're able to not just connect, but share and collaborate and share the right data with the right people at the right time to enable those transactions to go faster. So I'm going to stop talking now, and I'm going to hand over to Mike for a few minutes, who's going to tell us a little bit more about what we're doing in relation to that and the Landmark journey and our journey actually to fixing some of those problems.
Thank you. Thank you very much. Is my mic on?
Yep.
Perfect. Thank you. So often when speakers do this kind of thing, there's always reference to the venue that we're in. So when I arrived today, I noticed that we're at the Society of Pathologists, which got me slightly worried as to how I might sew that into conversation. There's probably a gag in there about me dying on stage or something. But then I Googled pathology, and pathology is more than just poking around dead bodies, which I didn't know. It's actually the study of disease. So I have a tenuous link, which I'm going to run with. Graham talked in that chart about the extending timescales that we've got, and I think that it's been referenced elsewhere that there's lots of extra symptoms that come across, that we keep coming across throughout time. As a Grenfell happens, there's a new thing that the industry needs to do. After the financial crisis, MMR comes along, so there's more checks that we need to do. So there's these things that have been layered, extra stuff for people to do in the process, usually lumbered on conveyancers or surveyors. Just check this while you're out there, just do that while you're doing the job. All adds time, and all of these kind of symptoms that are coming across. And we're pretty good at producing technology in the market, but the technology often helps alleviate those symptoms. Whereas if you think about it, the core disease is the fact that there's quite an antiquated transaction process. We're running on century-old processes of how we do it, and law and wet signatures and things like that. And it's quite a linear process we're working on. So that was my tenuous link to pathology and what we're trying to achieve, is that it's not necessarily about alleviating the symptoms, it's how can we help the industry in terms of curing the disease. And I feel like there is a bow wave now forming in the industry, that there is momentum around changing the overall process. You look, the Levelling Up Department of Levelling Up is really keen on changing the process. We might well have a new government this week. What are they going to do in terms of changing the process? There seems to be a lot of energy around how can we solve the disease in the industry. And LandmarkConnect is about us being able to do our bit and help you guys as our customers do your bit in terms of being able to be flexible to those changes. And ultimately, it's been quite a linear, siloed process, and Landmark has been quite a linear, siloed business. If you look at this chart here, or this slide here, you've got lots of Landmark businesses that all have sat traditionally within these silos, doing their bit for their customer and their bit of the process, but actually very little connectivity that isn't that kind of linear end-to-end process that we work through to buy and sell in the house. And so the objective of LandmarkConnect is to move all of our services that we offer to these customers onto a single technology platform, which we're doing, and Ali's going to talk about what that means for LVS and moving the SPN into that platform and what that means for you guys. But if you think that if we're doing the same for our estate agent customers and our conveyancing customers and our broking customers, then we can start to share information much more easily between people, and it doesn't necessarily have to be this linear approach. And that means that we can be adaptable for what might change within the market. So there is talk of, are we going to go down a route of home reports? I notice Gary's here representing home reports. The Scottish process statistically works better. That's being investigated. So if something like that gets put in place in England and Wales, what would that mean for how we all work and operate? Be quite a change, but to be able to be flexible to those changing requirements by estate agents being able to instruct through the same platform that the surveyors receive their valuation appointments, for that data to be shareable with other people in the process by it being within that same Connect hub. It's that kind of objectives that we're looking to solve. And if you look at things that are there and in place right now, material information is about not just a more educated buyer, so the buyer knows about the property, but if it's done properly and it's trusted information, then that can be used to help lending decisions. That can be used to help valuation decisions. Is the lease information useful if that's come from material information to help support valuation? And that kind of symptom of a PVQ, because we have to work on assumptions of a certain lease length, well, does that symptom start to be alleviated because we've been able to share the lease information that's come from material information? So it's, what we're about in terms of LandmarkConnect is building this platform that, one, helps right now, two, helps be able to build the technology for you guys to be able to do your job and continue to do your job and continue to be, provide success for your customers. And then three, provide that flexibility that, if stuff does change and there is a change in policy that says you need to do this here and it impacts that down there, well, it's no longer that linear sharing of data. As one customer said when we described this, at that point it was a slightly different chart, but their basic sense was, so in my understanding is, if it's in the white circle, then we can share it with somebody else. So if an estate agent uses material information or uploads material information into LandmarkConnect, then that could be usable by a broker to help source a product. That could be used by a surveyor to help underwrite a valuation or support a valuation. So that's the objective. and we're trucking along that journey. Ali's going to talk about the specifics of what that means for lending and surveying, which we'll talk about later. But I wanted to just move on slightly to something a little bit different. The first step that we had in terms of connecting the businesses within Landmark was actually connecting the insights that we produce in Landmark. Again, we'd been pretty siloed producing, here's what's happening in valuation world, here's what's happening with searches, here's what's happening with estate agency. And this is a really clear chart. So I have absolutely no need to explain this, but I'm going to do it just for those at the back. So what this does is for the last 12 months, it's massive actually, I didn't realize it was so huge. We've got several milestones across the transaction process, measured by month, measured against that equivalent month in 2019. So if we run through and from left to right for each cluster of columns kind of moves through the process. So you've got listing, sold subject to contract, searches ordered, mortgage valuation, so an SPN transaction, mortgage approval, which comes from the Bank of England's mortgage approvals, and then a completion. This is a kind of sneak peek into our trends report, which comes out every quarter. This is hot off the press that we've got June's data. The Bank of England data is a month behind, hence the empty column there. But what we're seeing is this is kind of the state of the market that we're all operating in. Hopefully, I'm sure it's no surprise for any of you in the room, we're pretty subdued. I think the interesting things are supply-wise, we're looking pretty good. Where any bar is over 100%, which is only supply, it means there were more properties coming on the market that month than the equivalent month in 2019. Where it's below, it means there's less happening in the equivalent month in 2019. So what you can see is the supply is there. If we were to layer on interest rates onto this chart, we'd almost definitely see a correlation. So January and February time, we had some pretty good rates on the market. It was pretty competitive. There's a lot of activity in the purple and the light blue bars, which is mortgage valuations and mortgage approvals. And then as rates go back up again, we see that start to subdue. The same thing that we saw in the back end of last year. So it's a really rate-dependent market. As rates come down, we see a bit more activity. As they go up, we see that activity start to die off. But the other interesting thing is, whilst we're seeing sold subject to contract doing quite well, so again, April looked pretty good for SSTC, so pretty good, still less than 80% of 2019, but comparatively, we're not seeing that come through into completions. So there is a pipeline building of people who can't complete yet, who can't move, which is probably systematic of that issue that Graham talked about, which is that it's taking longer for stuff to happen, and the longer it takes to happen, the more risk of a fall through, the more risk of change breaking down, the more faff for everybody in this room and everybody in the industry. So I guess the stats are telling us what we already know a bit. We're in a subdued market, but the length of time it takes to sell makes that even worse.